Hey everybody, and welcome to another episode of today's DeFi News 5 under 10. I've picked out these 5 articles. I'm just going to run through them very quickly to show you which ones they are. So, Solve Protocol launches Seahorse initiative to manage allocations. The second one is going to be Dodge and DeFi avoided by Australian crypto fund with 119% of year-to-date returns in 2021. The third one is going to be Barnbridge unveils application to maintain portfolio weight of ERC 20 tokens. The fourth one is going to be why investors should adopt hybrid finance for their business. And the last one is going to be Aave up 16% on the news of Aave Pro launch. All right, so let's going to jump straight into the first one. So I've picked this one here. So Solve Protocol launches Seahorse initiative to manage allocations. Solve Protocol, a pioneer in the space of finance NFTs, is opening a new initiative designed to entice projects to ensure and manage their allocations in the form of Solve vouchers on its platform for secondary markets. Now, the next part here is kind of why I picked it. It gets a bit more interesting here. I'm not too familiar with Solve myself, but what I really like is the idea that they explain here now in a second. So which is this one. To begin with, users can buy or sell them directly on Solve Finance or on OpenSea. Okay, but then this part. In addition, the vouchers can be used as collateral to borrow against NFT FI. So that's what I thought was really interesting. I'd never thought about that before, using NFTs as collateral to borrow against. So let me finish off here, this part. So projects can use these vouchers as a form of fundraising. By issuing allocations in the form of vouchers, projects are able to retain full control over the release schedule and mode, which helps stabilize the token price from the secondary market. Crashes since the tokens will be locked up as allocations in the form of vouchers. Now, this way, the value of the tokens will be represented as an NFT in the voucher, which will be also used as a form of collateral to borrow against, with neither action affecting the total market supply. The main reason I just picked this one here is I just wanted to, if you did not already notice, introduce the idea of using NFTs as collateral for borrowing. Okay, moving on to the next one. So Dodge and DeFi avoided by Australian crypto fund with 119% of year-to-date returns in 2021. So according to Bloomberg, Apollo Capital, based in Melbourne, Australia, has reported 119% year-to-date returns since the start of the year. Thus, it has outperformed Bitcoin and has seen a 96% growth so far this year. Apollo Capital opts for Ethereum-based crypto projects. So this is kind of why I wanted to touch on this article. I just wanted to kind of see what they're focused on and is it something that we could copy, right? So, besides Apollo Capital has codes of the blockchains invested in thoroughly audited by top-line third-party experts, which I really like. Means they don't just take anyone's word for it, right? They actually look at the code. So they do the research. Who also confirm that the crypto teams have high expertise and that they are not anonymous. Okay, so one thing that they value a lot when investing, obviously, is there has to be a team that's not anonymous, and they have to have experience. So that's stuff that we can take away from that as well. And then next thing here, DeFi platforms and Dogecoin are avoided. So they don't deal with DeFi. And they explain here why. They said like the Whale Farm and what was the other one again? Titanium token that got rug pulled basically. So they're trying to avoid that stuff. And the last part here is meme coins. So meme coins are avoided due to the fact that they are very volatile and have zero actual utility. So the reason I picked this article is I wanted to, when picking cryptos ourselves to invest in, I wanted to check out, how you say it, pick a couple of things or takeaways from this, right? So I have a couple of takeaways. So they do their research, they look at the code, the team is very important. They try and stay away from DeFi that's new, and hasn't proven itself yet. They stay away from meme coins, and utility obviously matters. So I think that's the main takeaways here. Okay, moving on to the next one. So Barnbridge unveils application to maintain portfolio weight of ERC 20 tokens. Okay, so decentralized finance protocol Barnbridge has introduced an application that allows users to automate position management between Ethereum-based assets. Now, I thought this was pretty cool. For me, this was once again something new. That they're now looking at how to maintain portfolio weight and automate it all. So here continue. On July the 5th, Barnbridge announced its second application, dubbed Smart Exposure. The application enables users to passively maintain a particular weight between the assets in the specific ERC tokens with like automatic rebalancing. The application has been launched on the Ethereum mainnet with support for wrapped Ethereum, wrapped Bitcoin, USD coin, so USDC, in pairings like weighted 75-25 or 50-50 ratios. It will also be deployed on the Polygon network in the coming weeks. So I just wanted to touch on this article. Actually, one last line here. The protocol explained that the functionality is possible because Smart Exposure maintains its own asset pools. Now, obviously, if you want to dive a bit deeper into how this all works, you can find all the articles, of course, in the description. But yeah, just something to know is that automatic rebalancing is something that's also being created right now. Okay, this one I thought was quite interesting as well. So, why investors should adopt hybrid finance for their business? I thought this was really interesting because it touches on institutional money joining DeFi space. So, here we go. Hybrid finance expands the frontier of the financial industry such that investors can take advantage of regulated, simple, and yet autonomous solutions. So, I'm going to skip down a little bit. Because first of all, in the beginning here, which I'm skipping now, to just explain the difference between centralized finance and its pros and cons, and in decentralized finance and pros and cons. But like we kind of touch on it down here as well. So, what is hybrid finance? So, hybrid finance stems from an intent to commercialize DeFi by introducing elements of centralized finance. The goal is to nurture DeFi strong suits while eliminating its flaws, especially irregularities, complexities, and a lack of standards. Hence, an average HiFi, so hybrid finance, solution still maintains blockchain attributes like immutability, transparency, speed, and smart contract-enabled financial processes. In addition to this, it strives to comply with regulatory requirements and provides the level of confidence associated with centralized solutions. So basically what they're saying here is the main problem with like say the old school centralized finance is it just can't do all the stuff that DeFi does. But the main problem with DeFi is that it's not regulated in a way that all the old school finance institutions, I guess, can use it, right? So a hybrid, obviously, as the name suggests, it's a hybrid between the two of them, and it dives in a little bit deeper down here. So what does hybrid finance bring to the table? Institutional investors are mandated to restrict their activities within the regulated financial realm, right? So they're not allowed to do it. So before now, they could not fully explore the opportunities of decentralized finance and avoid the reputational and regulatory penalties that usually come with using unregulated products. Hence, having KYC, Know Your Customer, and AML compliant HiFi products is a big deal. For one, institutional investors that opt for these solutions can ascertain that they're not involved in illegitimate operations or activities prone to attract the wrath of regulators. So once again, it's just about bringing that level of confidence to institutional investors so that they can actually use the products that DeFi offers. Then apart from the regulatory clarity that HiFi provides, and I think this one actually is also very important, it also does away with the excessive complex processes. Note that convenience is one of the strong suits of HiFi. Therefore, parts of the improvements that HiFi offers are simplicity and high usability. These solutions integrate seamlessly with existing financial systems. So basically the whole part here is just DeFi is quite difficult to use. So they want to simplify it, but they also want to make sure that they have the regulatory clarity. So that's something I also want to touch on there. So HiFi, I did not know if you were all well versed in HiFi. If you known about it, it's something that's quite new to myself, so I wanted to touch on that as well. And the last one is going to be a very short one. We talked about this one yesterday, and that was Aave Pro, and I just wanted to mention here that Aave is up 16% on the news of Aave Pro launch. So that's it for today. If you like the news, guys, thanks for watching again. Please do subscribe. You'd help me out a lot, and catch you in the next one. All right, bye bye.